Markets are heating up, and ETH looks like we might have a little bit of a delay. We'll break it all down for you today. My name is Paul Barron. Welcome back into Tech Path. We'll get started. We'll talk about Ethereum, get into Bitcoin charting, take a look at, actually, we might even take a look at some sentiment today, give you guys kind of a rundown of where the market, there are some tokens out there that are making some pretty big moves, so we'll try to break down some of that. Let's thank our sponsor, and that is iTrust Capital. And if you guys want to get into long-term holding of your Bitcoin, your Ethereum, or maybe some of your altcoins and do it in an IRA, you can do that over at itrustcapital.com. Just go over to their website. They do a ton of education. You can join over 200,000 accounts over there, 9 billion in transactions, and jump in and start your own IRA. They do have some benefits if you want to transfer an IRA, or if you can just start one up from scratch. Use our link down below. It's going to give you a $100 funding reward to get started. Let's get into a few topics today. I want to open up here, of course, and we've kind of hit on this a little bit this week, but Coinbase has launched the smart wallet, and it is here. And this is going to be an onboarding bonanza. And we've talked, if you haven't checked out our Base video that we did yesterday, go back and look at that. There's a lot happening within the Base ecosystem. There's a lot happening, I think, now with what we're going to see around project developments in the Base ecosystem. So the smart wallet's going to become a pretty significant tool set. I want to go to a clip that had Novogratz and Jesse Pollack on talking about what this means for Coinbase. Take a look.
What changes in the regulatory framework need to be made before Base can issue its own token, its own, L2 token that gets to trade, where the users start to be able to, generate their own value and keep value by being a user?
Yeah, so as we've said from the beginning, we have no plans to issue a token for Base. And I think what we're seeing in the broader regulatory environment in the United States is that it's just too unclear for entrepreneurs. And I talk with builders every single day, and what we're seeing pretty consistently is that builders are having to spend more money on lawyers and regulatory guidance than they are to spend on engineering. And that sort of overhead for startups in a country that has historically been known for innovation is really, really bad. And we think that if we don't get that regulatory clarity that we've been pushing for, we're going to see innovation leave the United States and go over shores.
Right. But I guess we had the Fit 21 bill pass, at least the House. It's not in the Senate yet, but the Senate's going to come with their own view. Would something as important as that then allow you guys to say, hey, because there's a tremendous amount of potential shareholder value, locked up in what you guys are doing, and so.
Absolutely, and we're really excited about the shareholder value that Base is starting to generate. As you've seen, it's starting to generate really significant revenue for the business. I think in terms of the regulatory framework, we've seen progress with Fit 21. We've seen progress with state frameworks like the DUNA in Wyoming, and we're really excited to see that mature. And we're confident that as those frameworks mature, we're going to see more innovation from Base and from the broader on-chain economy.
So a couple of points that Pollack was hitting on there is, regulatory environment is really kind of the impetus of not being able to launch a token, which would unlock, to what Novogratz is talking about, a lot of value for Coinbase as a stock price and all of the shareholders that are in Coinbase. But I'm kind of on the fence with that, because I think Pollack kind of alluded to it without saying it, and that is they're using this as a trump card to simply say, we can't innovate in the United States. That's a pretty big deal to come from a publicly traded company, an IPO like Coinbase, one of the most, I would say, respected crypto facilities on the planet, that can't innovate in the country that it operates in. That's a pretty big statement. This kind of walks the walk for them, so I do understand that. And I think this is probably one of those things from a regulatory standpoint and also a political standpoint for Brian Armstrong and Coinbase to not do a Base token, at least for now. We'll see how that changes. They go in a little bit further on how they make money with Base. Take a look.
Jesse, one thing that struck me also is that you have the exchange itself, but when you look at Base, beyond the ability for people to build on it, how does it make money at the end of the day? Does it add any financial value to Coinbase, and does it charge anything of the people who are using it or plan to?
So the really powerful thing about Base is that it's a new technology platform. And kind of like the internet transformed the world in the early 2000s, we expect Base and other chains to transform the world in the 2020s and bring about the new on-chain era. And the way that happens is by making it faster and cheaper and easier for everyone to build new things. And when people build those new things, we're going to see an incredible wave of new applications that users are going to use and that they're going to pay for. And Base is the application platform, kind of like AWS, that enables that. So as more applications are built, Base is going to generate more revenue. And as more applications are built, Coinbase is going to be the front door that lets users access those applications. And that combination, kind of both being the platform and being the front door, is incredibly valuable. And it's something that we think is going to generate a massive amount of value for our customers and a massive amount of value for the business in the next few years.
So if he is right, and Coinbase kind of becomes the next generation of on-chain internet, and all innovations, or most of new innovations, would start building on Base, he is correct. That's going to open up a huge wave of not only activity, but also on-chain accounts, the ability to create liquidity in those, which is probably going to come from USDC, of which is most likely going to be held in either a Coinbase wallet and or a Coinbase account, all of which can now create yield. So there are values to them, other than the fact that on-chain liquidity is a big deal, but also just think about this. If you had the top 1,000 companies innovating on your internet, so to speak, but that is kind of where Base is going. The fact that we saw 1,000 projects rolling out here for on-chain summer was pretty impressive. And I think it's only going to compound. They're going to see we see 2,500 projects next year. Think about the number of projects that are going to hit. Not everyone is going to do it, but you're going to find some next Uber Eats, next type of innovation in AI, all sorts of projects that I think are going to start rolling out within that. Let's move on to Bitcoin real quick. Bitcoin tapping 72K could be the fuse for a new all-time high. Many people looking at 72 as kind of the mark of redemption for Bitcoin, tapping 72 right now. There's about 1.5 billion of short positions ready to be liquidated, all the way up to around 75K, which would be an all-time high. That is interesting because there are a couple of points that we've been watching here with sentiment data that has, for Bitcoin in general, has been starting to move slightly up. And when I go to the chart, I don't think I have it up, but I'll bring up the chart here in a second, and we'll get into that along with some stuff around Ethereum. But I think that's going to be a factor here of breaking through that 72K window and also starting to see if it can hold, because that's kind of been the issue right now. Bitcoin makes it up around 71, 71.8, and it starts to recoil back down to where we've seen the performance here recently, back in above 70K again today. All right, just in, the Bitcoin ETF had a massive net inflow, 885 million. Let me zoom in on that for you guys. 885 million on the 4th of June, which is now second highest daily net inflow ever. So another big reason why we're starting to see a little bit of price movement. Further into this, you got BlackRock starting to look a little bit more antsy in terms of tokenized assets. So BlackRock and Citadel planning to launch a new national stock exchange in Texas, and they're going to try to compete with the New York Stock Exchange. Now, you think about what is happening, and Larry Fink, listen, we've talked about him and we've shown many clips on this channel. His conviction toward tokenized assets and tokenized securities is unmatched. I haven't seen anybody in Wall Street really understand it to the level of where he thinks change is going to happen. I believe that's the case. So he may be in a position where he's trying to get in early so they can come faster to market with tokenized securities. That's an option that could be playing into this. I want to go to a clip here by Gensler, because he's talking a little bit more about these exchanges and their roles. Take a look.
Okay, now, Polkadot, Cordana, Cosmos, Immutable, Ronin, Bonk, Osmosis, Sushi Swap, My Neighbor Alice have all traded millions. I'm talking about millions of dollars this very morning. Now, should we have a Sushi Swap, maybe an ETF, or the proprietary kind? Just I would think that Bonk is a natural, and Osmosis. These are trading Gary, these are millions of dollars. These things are traded. Shouldn't we have it? Shouldn't we have some sort of product?
Let me say something more broadly about the crypto markets. Right now, without prejudging anyone, these tokens, whether they're the ones Jim listed or other tokens, have not given you the disclosures that you not only need to make your investment decisions, but also that are required by the law. It's a basic concept in our securities market. We, the SEC, tomorrow are turning 90. Happy birthday, SEC, 90. And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges, like here, this floor, the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do.
Remember, most of these exchanges are in decentralized markets, and that in itself kind of eliminates the trading against you, other than just the liquidity of the markets. But I would argue that point is that this is something that Wall Street's done for quite some time. Trading, most of them have been hedge funds, and we've seen the accolades of all sorts of insider trading within Wall Street. So he's acting if it doesn't happen. It does happen quite a bit. And it's a factor that they continue to defend. Now, you look at this right here, and this kind of showcases this right here. The Massachusetts Securities regulator now said they're going to investigate Roaring Kitty for GME. And remember, Massachusetts politicians have been trading themselves. So if you look at the current reps within Massachusetts, you got Catherine Clark, Congressional Subcommittee. You've got Rep. Lori Trahan. You've got Bill Keating, Seth Moulton. All of these are trading out there. And of course, remember that most of their portfolios are beating the market at the moment. So do they have access to information, or what are they doing? And these are the kind of things that are not disclosed in many cases, and just like traditional hedge funds, and especially on shorts where we don't get those kind of disclosures. So it is something that continues to pretty much, I think, plague Wall Street. The SEC announces also they're looking at GameStop on options activity for manipulation after Roaring Kitty disclosed his option trades. For reference, U.S. Congress option trades all the time. Yes, they do. For example, Pelosi bought NVIDIA call options before the major bill in news, which is up now 200% on her calls in the last just 190 days. So yet no investigation. Interesting times we have here. So when the game isn't playing in their direction, it's kind of like, hey, let's take the ball and go home, or let's investigate. Here's a quick, whether you like this or not, in terms of short selling, but take a look at this one right here. This is RFK talking about it.
You consider yourself a so-called ape, and would you make
I consider myself what?
an ape, like a retail? They call themselves apes. You do, okay. And then how would you make sure retail investors are protected from Wall Street?
One of the ways that's done is through predatory short selling, and that's why I consider myself an ape. I don't, I think there's an argument for short selling in some cases. Predatory short selling is a way of deceiving the consumer in order to make quick cash infusions to the pockets of the people who are in charge through interested parties, and it's crooked. In that sense, I consider myself an ape.
All right, he's getting at the point of predatory short selling, which is the orchestrated short selling that often does dump on retail investors. Though I am for open markets, I think open liquidity is really kind of the only way to go. But when you have the scorecard and you have the cheat sheet, then I think there's a problem there. If I think those playing fields were level, different kind of scenario would play out. I think that will be, waged within the political realm, whether RFK gets in or we see other financial institutions that maybe start doing things a little bit different, especially if we start to see a lot of this stuff go on chain. It'll be one to watch. If you get into ETH, and right now Ethereum course, SEC slowing down the S1s. Will we see an ETH ETF by the end of this month? I don't know quite yet. Here's a clip on Gensler talking about these S1s and how long.
In January, we approved an exchange-traded product on Bitcoin. And about a week and a half ago, similar filings to list on the New York Stock Exchange, list on NASDAQ and the like, exchange-traded products on Ethereum. Ethereum had been traded on the Chicago Mercantile Exchange futures for 3+ years, and the staff looked at that closely, and that was approved. Now, the underlying exchange-traded products still need to go through a process to have the disclosure about that, and that will take some time, but they're working on that right now.
All right, so as you can see, they're talking about a position right now where we're probably going to see a little bit more slowdown on these ETH ETFs, but it does open up an opportunity, I think, for Ethereum. One thing to look at, and we'll look at some sentiment here in a second, why Ethereum can outperform in the next stage of the bull run and the bull market. A couple of points they hit on within this article. Let me kind of zoom in on that for you guys. Whales have been accelerating ETH accumulation since March, so a lot of people starting to buy more in. As of June this year, more than 97% of stakers are in the money. That's a big deal. So staking accelerated significantly in 2023. Remember, all of that was happening during ETH under the 2K mark. All of that is still a good sign because what it means is people are willing to hold, and longer positions will be tougher to beat. So if you look at the expectations that ETH may track a trajectory of Bitcoin and may have, some potential, I think, here to see some pretty significant growth. Big factor is going to be in June will be the accumulation for the ETF launch. How much will be purchased? We don't necessarily know, even though there's some people saying that we could see some significant numbers coming into this. Traders now seeing that ETH could try for around 6,000 in the next few weeks. Love to know your thoughts. Do you think ETH, here we are filming this, early June, within the next 6 weeks, next few weeks, before July, could we see an Ethereum at above $6,000? That would be a significant move. Imagine where Bitcoin would be at that point. I want to go to a quick clip, and this is getting into the CFTC, because this is where it gets a little bit more complicated of who is going to be controlling these digital assets in the future. Take a look.
This is about filling a gap in regulation, and that bill largely accomplishes that goal on the CFTC side, giving us regulatory powers to register exchanges, custodians, broker-dealers, intermediaries, and bring some transparency to this particular side of the market that involves commodity tokens themselves.
So you are in favor of it?
I'm supportive of moving forward with legislation to fill the gap. There are some issues that I raised with members of Congress about the bill, but as you said, it's just one step. Senate still has to take up the bill. The White House has weighed in and says it wants to work with Congress to fill the gap and further support both innovation, which, sort of outside of my purview, but understanding that there's gaps in regulation and customer protection issues.
But you're in favor of the idea that it does give power over the cryptocurrencies themselves to the CFTC?
100%, and I've said that all along. We have, as defined by current law, we have commodity tokens, we have security tokens, and what we've experienced at the CFTC now for over a decade is this gap in regulation where we don't have tools to regulate the market, and it's leaving a pretty significant chunk of the market unregulated. So when you look at commodity tokens like Bitcoin and Ether, you're talking about 60% in the entire market cap of the crypto market. And with that in mind, I think we have a serious issue in terms of filling that gap, and this is what this legislation sort of achieves.
So this could fall both positive and also negative. This, of course, is Rostin Benham, the chair of the CFTC. And we've talked about him quite a bit. We've actually had the former chair of the CFTC on our show. This would be something to look at. We probably should get him back to talk about, kind of the framework if the CFTC does get, the guidance authority of digital assets, especially around commodity tokens, like he's mentioning, what that might mean. Now, this goes a little bit further in the same interview. Here's Benham talking about Gensler. Take a look.
Sometimes Gary Gensler, he knows about crypto. He was at MIT. I wouldn't say he was 180, but he certainly got, it seemed like he changed a little bit on what he thought about Bitcoin, what he thought about crypto in general. And then you look at certain individuals, Senator Elizabeth Warren, take your pick, on maybe on either side of the aisle, I guess. It seems like more on the left are against crypto. Do you agree with Gensler's view of Bitcoin? You have the same lens. Do you agree with it?
My opinion should not be driven by what I think or what I like or what I dislike. It's what my responsibility is as a regulator and what we observe in markets. So again, we have this legal framework that defines commodities a certain way. We have these tokens that, the way they're constructed, fall within the commodity definition of the existing law. And we've seen these markets emerge. They've grown, they've scaled, they've gone up and down, but we've seen sustained interest by retail investors. We've seen sustained interest by institutional investors. Right. And right now, unfortunately, we've seen sustained enforcement actions. And that's my problem, right? My number one responsibility is to protect investors, to protect the American economy. And when we see continued manipulation and fraud in this market, when half of my enforcement docket is crypto in an area that I don't have traditional regulatory tools, that is, in my mind, a huge red flag.
Now, granted, most of the regulatory docket that he's dealing with is the fact there isn't regulation. So those are the kind of things. If regulation does fall into place, then what his problem will be is there won't be any crypto that falls into that because they'll have regulatory pathways. So that in itself is kind of a little bit alternative to what he's talking about. And he also said at the beginning of the comment there was that he didn't, he wasn't doing this in the way he feels. I don't think Gensler is doing it the way he feels. He just thinks that this is the regulatory pathway because there's, again, nothing that Congress, at the end of the day, Congress is going to determine how this gets regulated. And yes, you're going to have these agencies that will try overreach. Yes, you will have Congress pushing back on this. But if companies, and especially in the cryptocurrency space, start to see that there is a pathway, you're going to have the good and the bad. And the good is going to rise to the top. The bad will go the way of penny stocks and many of the other, assets out there that are looked upon, kind of negatively. So that's kind of where I think it's going to be. It really boils down to how you're going to vote. And by the way, we have something for you guys. We just started tracking our crypto tracker. This is now available over in the MSI, where we're navigating the idea of sentiment based on the 3 top candidates. So you guys can find this over on our website. Just go over there and you'll see it. It's the Crypto Political Tracker, tracking sentiment on all 3 candidates. So you can kind of see it week by week, day by day, who's leading out. Biden slipping up just a little bit, RFK dropping slightly in this last couple of days. So check that out over there. And of course, if you're not in the Diamond Circle, make sure and do that right now. It's a great place to get additional content. Also, by the way, if you're not following me on X, do that right now. It's @PaulBaron. We'll catch you next time right here on TechPath.